Looking to build a portfolio or add ETFs to your existing holdings? Are you trying to decide what to invest in for 2022? This video will break down my personal choice for the top 4 Canadian ETFs to buy going into 2022. I made this exact video last year and it was one of my most successful ever, so here I am trying to recreate the magic. We obviously don't know what's in store for 2022, but investing in the right ETFs can limit your risk when there's market volatility. This is geared more for beginner investors, someone looking for a set it and forget it style of investing. I'm going to make the same disclaimer as last year's video. ETFs invest in many stocks, so obviously there will be overlap when choosing multiple ETFs. Some ETFs will own the same things, I know that, you'll be fine. Indirectly owning Apple stocks in 2 different ETFs is okay. If you're interested in building a portfolio with $1,000, $5,000, or $10,000, please check out these earlier videos I've made. Please remember to subscribe to the channel and thumbs up if you've liked the video. VEQT is the first ETF I'm recommending. I would allocate 40% of my portfolio to this one ETF. This is as diversified as you get. It invests in over 13,000 different stocks. This video could end right here just with this ETF, but that's boring. This is Vanguard's all equity portfolio. That means all stocks, no bonds, no fixed income. This could be defined as risky since it's all equity, but since you're investing in the entire world, over the long term, I promise you'll be fine. It was only created 3 years ago, so we don't have that much data to judge its performance over the long term. They pay an annual dividend. The current yield is 1.27%, but you're not investing in this for the dividend. This is for capital appreciation. You can see exactly what they're invested in as well. It's mainly other Vanguard ETFs, but it's providing you worldwide coverage. Take a look at the breakdown. 74% North America, Japan, some in UK, some in China. I'm comfortable leaving 40% here and letting it run. I'll recommend alternatives to this at the end of the video if you feel this is too risky and want a safer holding. VSP is my second choice. This is mandatory for every portfolio. I would put 25% of my holdings into this one ETF. Many of the stocks here are already included in VEQT. I know that, I'm doing it on purpose. Canadians have many choices like VFV, VSP, XSP, and ZSP, just to name a few, and they all do the same thing. All these ETFs mimic the S&P 500, the largest 500 companies in the US. The largest holdings are Apple, Microsoft, Google, Facebook, Tesla, Amazon, etc., etc. This ETF has a quarterly dividend with a yield of 1.04%, but again, you're not buying this for the dividends, that's just a perk, you're here for the capital appreciation. My personal choice is VSP. This one is hedged to the Canadian dollar, meaning regardless of the CAD to USD fluctuation, your investment won't change, it will only change relative to the actual stocks. If you want a non-hedged ETF, you can choose VFV, but it's not my choice. I only want to worry about stock risk, not currency risk. The annual returns vary widely. VFV outperformed from 2013 to 2015, mainly because the USD was appreciating in comparison to CAD. But if you look at the last 6 years, they've been taking turns outperforming each other from 2015 to 2021. VCE is my next ETF and I'm recommending a 25% allocation. Since my channel is aimed for Canadians and I'm obviously a little biased, I'm bullish on Canada overall. I like this ETF. It has a management fee of 0.05%, which I believe is the lowest on this list I'm recommending. It also has a decent dividend of 2.75%, which is paid quarterly. I would say that this more than covers inflation, but in 2021 and 2022, I'm not too sure about inflation anymore, it might be 4 or even 5%. This is the Canadian equivalent of the S&P 500, I guess, like the largest 500 companies in Canada, so you'll get heavy exposure to banks, utilities, and real estate. I've been impressed with the performance of the last 5 years, they've had a 10% annual growth. This is matching the S&P 500 average growth rate, which is considered by many experts as the benchmark to judge your investments against. The ETF holds 53 Canadian companies, with the top holdings being Shopify, RBC, TD, and Enbridge. It's had a good year with 25% increase. It probably won't do the same in 2022, but I anticipate long-term growth in the future. The last suggestion, and probably the biggest change from last year, you're going to put 10% of your investment into a cryptocurrency ETF. A crypto ETF in your TFSA is the only way that I could think of on how to invest in crypto without paying any tax. I'm actually torn on how to go about this. I only recommend investing in the top 2 cryptos, which is Bitcoin and Ethereum. but do you put 5% into each, or do you put 10% into Bitcoin, maybe skip Bitcoin altogether and put 10% into Ethereum? I'm not too sure. I actually own both. I invest in Bitcoin and I mine Ethereum. So obviously I've been getting paid in ETH for the last 6 months now. If you want to invest in Bitcoin, I would go with the ETF BTCC. This one is in Canadian dollars and it's also hedged. I made a separate video about this when it came out earlier in 2021. You can check that out if you'd like more info. If you're interested in Ethereum, I would stick with the same company, Purpose Investments. They also created ETHH, which is an Ethereum ETF. It's in Canadian dollars and also hedged to the Canadian dollar, so no currency fluctuations. I think crypto is the future. I think everyone should have at least 10% of their portfolio invested in cryptocurrency. Stop trying to avoid it. It's here to stay. Personally, I would stay away from all other altcoins. They haven't proven themselves, to me at least. That makes 100%. I had 5 ETFs recommended in last year's video, but that was too much. It might be too confusing. You'll do just as well, if not better, with these 4 that I just recommended. I mentioned earlier in the video that I'll recommend a safer version of VEQT. Since that one is all stocks, some people might want safer. Safer means fixed income, aka bonds. I'm not a fan of bonds. I'm not interested in very low returns and safe fixed income, but if you'd like, you can go with VGROW, which is 20% bonds and then 80% equity. Or you can go even safer, which is 40% bonds and 60% equity. But if we look at the returns, VGROW is doing slightly worse than VEQT because it has 20% fixed income. And then VBAL is doing even worse than the other two since it's 40% bonds. So long story short, I don't like bonds, but they're there if you'd like them. Thanks for watching. That's it for this video. I hope this video does as well as last year's. I think I had like 43,000 views on that one and it's still growing. I got over 1,000 subs from just that video alone. Let me know if you have any questions and tune into the next one.